Hello everyone, welcome back to Momentum Investing Club. Today is 18th of September and today's topic we'll be discussing is buy winning stocks and you can ignore the rest. So where does this come from? First, before we get started, a quick disclaimer. We are not a SEBI registered advisor. The content I share is purely for educational purposes and should not act as financial advice in any sort of way. So let's get started. So yeah, when you enter the markets, the main goal is to get returns. And when investing, the main question arises, what should you exactly look at? Should it be the stock's valuation? Should you look at the fundamentals? Is the revenue increasing? What about the PE/PB ratio? Is the promoter selling? And thousands of other parameters that one can look at. So once you enter market, there's a bundle of things that one could go over to choose the right set of stock, and it gets overwhelming. So what if you could just focus on one and not those thousand? And the one that we're talking about is, instead of on thousands of parameters, what if we could just focus on which are the best performing stocks currently? Because that's the only thing that matters. We are looking for performance in markets. And how do we do that? We do that with momentum investing. So the idea about investing only looking at the performance is of stocks is called as momentum investing. So bluntly put, it's the idea that in markets, winners keep on winning, and our job as investors is to join the winning stocks and ignore the rest. So that's the entire idea of momentum investing, that you need to just focus on the winning stocks and ignore the rest. It basically follows the laws of nature or the laws of momentum, which states that the body will continue to be in a state of motion unless an external force is acted upon it. And our job as investors is to keep holding during the moment it's going up. What's special about this investing philosophy? So, first of all, it's zero guesswork. You already know what you're getting into and why you're getting into it. So, there's no guessing on this should be its valuation, it's undervalued, or we are forecasting any other revenue growth. There's nothing of that. So we are entering purely based upon the stock's performance. So there's no guesswork. And secondly, there's also the reverse engineering concept, which we could basically say it's like we are not assigning a value that the stock needs to go from XYZ to XYZ plus one. We are just forecasting that since this stock is performing, we'll just enter into it. So instead of finding the winning stocks, we find the stocks that are winning and enter into them. So it's complete opposite of what investors do in the market. So yeah, you get the idea. And does this work? So I'll put up a tweet right here, which is from Radhika Gupta, the CEO of Edelweiss Mutual Fund. And as you can clearly see here, over the last 10 years, the best performing factor among quality, value, growth, and some other as well, momentum has been the consistent performer over a period of 10 years. So in 1 year and 3 year and 5 year, and I'll give a better view for this. So here you can clearly see the green line indicates momentum philosophy. And this is how momentum has performed over the decade. All credits to Edelweiss for all these data. But yeah, does it work? It definitely does. Also, there's a also famous person, Eugene Fama, the father of efficient high market hypothesis, who eventually got a Nobel Prize for the same. So, what the high market hypothesis states that at any given point in time, the price of the stock indicates all the available information about it, and there's no edge to it for any price movements. But he believes that even for his own hypothesis, which he won a Nobel Prize for, momentum is still an analogy for it, anomaly for it. Coming along is why the heck does this even work? The simple thing of buying the strongest stocks and it keeps on winning and you keep getting good returns. Why does this work? So, short answer, nobody knows. This is exactly why we don't look at any fundamentals. There's no assumption behind why this is working. We're just going with the flow that since it's performing, we enter. There could be psychological reasons, there could be FOMO, there could be fundamental reasons, but that's not the concern for us in this. It's basically what the system indicates and we enter. Moving along, so here's a nice little example of the horse race, which is famously mentioned by Alok Jain, who's another notable momentum investor. So, what the horse race basically means is, let's say there's a horse race happening and people want to bet on the winning horses. The race starts and all the horses are in a line. There's nobody in a sort of lead. Everyone's just smoking around. By lap, let's say 2 or 3 laps in, we see horse number one is winning. So I put my money on horse number one so that when she wins, I get to win big as well. But couple laps down the road, we see that horse number one is now lagging, whereas horse number six is in the lead. So what that person essentially does is removes his money from straw. He bet on horse number one and puts it up on horse number six. So essentially, he's just looking at what's performing and putting his money on the performance. Eventually, horse six wins, and that person wins big. So that's the entire scene with momentum investing as well. So you look at what's performing and stay invested in them. And to top it off, how does this strategy exactly work? It's very simple, straightforward, simple three-step process. First, you'll have to find the strength of the stocks. You'll have to see what the momentum is for each stock. You could do that using different filters or criterias, let's say rate of change or moving average, which stock is moving fastest, or RSI or MACD. Different filters can be used to find out the strength of all the stocks. Then you'll have to rank them. So this highest strength comes at the topmost, and the least strength goes at the bottom. And you buy the strongest of these stocks, and you ignore the rest, which have weaker strength. And you periodically, last step would be to periodically recheck what's the strength looking for each of these stocks. If there's any weakness in it, we remove that, and the new strong ones are added in the portfolio. That's it. So very simple, a straightforward three-step process using which you can create a momentum portfolio. Again, this portfolio has zero fundamentals, purely based on performance. And yeah, that's how you can create a zero fundamental based winning portfolio. If you liked this, here's I share more thoughts on this at momentuminvesting.club. I also share my own portfolio, which I've created using these oh, investing principles, and I update them time to time as and when I update the portfolio. If you want to have a look at that, please visit momentuminvesting.club. And also, if you like this, please leave a thumbs up. If you find anyone else would like this content, do share it ahead. If you like the content or the presentation, subscribe, or you could leave a comment if you have any doubts or any other suggestions. You can do all of these as well, of course. Yeah, that's it for this one. I'll see you soon. Bye.